What's going on, guys? Thank you for tuning into this episode of Twin Finance. My name is Dylan, and today we're going to talk about why investors fail. Now, before we get into investors failing, let's just first define what investing means. Now, you probably hear people say, you should invest in this or you should invest in that, and some people even say it about like you should invest in like a HD camera or whatever, it's something that's not even an investment. It's just a term people throw around. But when we talk about investing, guys, it's just like a family. When you invest in a family, why do you invest in a family? So you can keep your family going long term. The growth of your family, the growth of your family origin, where you came from. It's just like money, guys. It's long term. So when you invest with money, the true definition of investing should be investing to build long term wealth, to better your financial position. I'll just keep that brief. So when you're failing at investing, you're failing to meet that definition. So if you're not building long-term wealth for your family to have when you pass, or maybe you don't have a family, you want to build wealth long-term so you can be financially stable and maybe help people out, or donate to a charity, whatever your reasons are. If you fail to meet that definition, technically that's failing in our eyes. And now, like I said, just because failing doesn't mean losing money in investing. Failing means not building long-term wealth. So someone, you're young and you threw like $5,000 into Bitcoin and you made it into 60. Well, if you took that 60K out and bought a car, you ultimately failed in investing. You didn't build long-term lasting wealth. Now if you kept, you sold out of that and you got into, something, less volatile and something with a bright future, and you built long-term wealth, and ultimately you're going to succeed at investing. But if you don't do that, you're going to fail. And now these are the 3 reasons why investors fail. Is not enough knowledge. So I don't mean a degree, guys. You don't need a degree to invest. You don't need a business degree to know about investing. I truly believe, some of the greatest investors in the world do not have business degrees. And you know how I feel about that. Just based on I don't think knowledge you need from university. There's so much knowledge out there in the world that's out for you to get. So number 1, what I mean by not enough knowledge is you don't know enough to make an informed buying decision on a company. So if you don't know how to assess a company you're buying based on like a headline you read in the news, or someone told you at work, or whatnot, when Bitcoin was a thing. I didn't mention Bitcoin twice this video, but it's easy for everyone to relate to. People were just buying on speculative things, like on hopes that it would just go up, right? So that would be defined as not enough knowledge, and ultimately long term, you're probably going to fail because you didn't have enough information to make an informed buying decision. Number 2 is emotions are involved. So you see this a lot more so with like day traders and short-term investors. Their emotions get involved and they really start to like let it take over their lives. So their money starts going down. They'd rather get out of it and then try and revert back to go long term. They'll just get right out of it and stop investing. And their mood swings and everything. Essentially, guys, if your emotions get involved, it's gonna cloud your informed buying decisions. So really, you just want to keep emotions out of it, because ultimately money doesn't have an emotion. It's not a human being. So if you attach emotions to it, it's really just going to tear your investing career down. And then also, you just didn't develop habits. So if you failed, odds are you didn't develop a good enough habits. And what I mean by that is, okay, say you want to do some day trading, but you also want to put back some money for long-term wealth. You're doing $200-300 a month into like an index fund, or maybe some stocks or whatnot for your long-term wealth. If you don't stick at that habit, you're not going to develop long-term wealth. Because say you start trading and you get your emotions involved, and you're not developing the habit of keeping your emotions out of it, and in the discipline of saving that money per month to put that in there to build long-term wealth, then if you don't develop the habits, eventually those are going to run out. Like your want for investing is going to run out, and ultimately you're going to fail at building long-term wealth. So really, that's the 3 reasons, guys. I'm not trying to put anyone down, but and if you've already failed at investing, you can get back into it. If you've started investing, 5-6 months, and then you ran into some money problem, you had to pull your investments, and it's all gone now. Doesn't mean you failed. You've only failed till you stop trying, right, guys? And it's never too late to start building some long-term wealth, even if you're old. If you start saving, $400 or $500 a month, and you do that for a few years, be amazed at how much money you have, that you really thought you could you could never even have, and that could really do a lot for you. So yeah, guys, that's basically, why investors fail. There's obviously many more reasons out there, but these are probably the 3 key ones, especially with young investors. This is probably directed right towards, people that whenever they start investing, after university or before school or whatnot, this is who it's directed towards. And those are the 3 reasons you're going to see people, those are why people are going to fail in investing. So I hope you guys took some value from this video, and if you haven't started investing yet, don't think about these things, guys. Don't think about it, because the more you think about it, the more they might happen. Don't worry about it. Just think about building good habits and focus on, the long-term wealth, guys. Warren Buffett has a quote, and he always says it. The reason why people fail in investing, or the reason why, people don't build long-term wealth, is because they want to get rich fast. They don't want to get rich slow. So if you want to build wealth, look to build it slow. I know that's not ideal for everyone. Everyone would love to, have $1 million next year, obviously. But that's not the case, guys, a lot of times. And I hope you guys took some value from this video. Throw a thumbs up on the video if you enjoyed it. And also subscribe to the channel. Take care, guys, and have a great day.